Hello and welcome to the Unboxed podcast, a show dedicated to maximizing impact for small business owners. I'm Catherine, your host, and today I am joined by the fabulous Susan Bryant. We have an amazing episode for you today. But first, before I get into that, I want to remind you that this is brought to you by Unboxed Advisors. Unboxed Advisors brings the power of strategic accounting, advanced tax planning, and holistic business advisory to small business owners seeking to maximize their impact at home, in the boardroom, and in their pocketbook. If you love our content and want to support us, please consider subscribing, hit the like button, and of course, head on over to unboxedadvisors.com to check out the free downloadable goodies and links to all of our podcasts. So let's get into it. Susan and I, over the past few months, we have been spending a ton of time talking with small business owners. And there's some common threads that we are finding ourselves talking about with almost every owner, regardless of industry, profession, and geographics. We are seeing some of the most common heart burning inducing problems. So, those are what we're going to talk about today.
Yeah, let's talk about all the problems. And we can also talk a little bit about some of the solutions too that we're recommending. Because I mean, that's one of the biggest things for business owners is A, being heard and understood. Like, please understand my pain and kind of empathize with me. But then also, how do I get out of this pain? Like, I don't want to live like this anymore.
Yes. Oh, yes. So let's start by talking about one of the pains that we actually just got done addressing. And that is the DIY of finances. There are so many owners, and I'm sure that you've seen this too, Susan, that are managing finances on their own. And it just leads to a lot of errors and missed opportunities. And how often are you seeing business owners who are highly successful DIY their finances?
Oh, it's very prevalent. I think there is this idea that the bookkeeping is of a diminished value, which is couldn't be furthest from the truth. I mean, it is really a critical function in any business, regardless of size, because it is how you are tracking the performance of your business. And it's tracking what you own, your assets, and what you owe, your liabilities, all of which are extremely important from a management standpoint. But also from a tax standpoint is really
Mhm.
sort of this two birds, one stone kind of thing. So one of the things that I think these business owners have kind of faced is they haven't had a reliable bookkeeper. Unfortunately, they've been burned a few times. Perhaps it's someone who didn't show up, could be someone who maybe was a little less than honest, maybe fudged a few things, held themselves out as something that they weren't, they could not qualify to do the work.
Mhm.
So I think that they are a little hesitant to let go of that function in some regards because I think they think that they're saving themselves more trouble,
Mhm.
but really by not investing in the right accounting and transaction level recording um service or person, they're really doing themselves a great disservice because it's taking them so much longer to get the information that they need to make good business decisions.
Yeah.
So those are my thoughts on that.
And unless they own a bookkeeping operation, no business owner is like, oh my gosh, I came into business to do my bookkeeping on my own. Uh, so that's something that I find fascinating. The other thing that I'm starting to see more on the team and the people side is what got you here isn't going to get you there. The bookkeeper that helped you grow that business from, $100,000 in annual revenue to maybe, $700,000, that skill set is radically different after that tipping point. So, also finding the right alignment with the level of, do you need a bookkeeper? Do you need a staff accountant? Do you need a controller? We've been seeing that progression really being a pain point too of owners going, when do I need what?
Yeah. Well, and maybe also this notion that, well, I've worked with this person for 15 years, 20 years, and like they don't know when to file for divorce, right?
Mhm.
Like it's time, writing's on the wall, it's not working out, and they just want to keep it going because they feel like there's some type of reliance, like maybe they trust this person, but they may not be really helping them the way that they think. So it's a really good exercise. Go through the process of having a new person, independent third party, take a look. I mean, it
Mhm.
does like shopping for clothes, doesn't cost anything to try it on. Just take a look and see, is there something that your longtime resources is missing? Does that
Mhm.
mean you need to upskill or change or altogether go for a different type of resource? Also, looking to technology, is your bookkeeper stuck in an era where everything was super paper based? And now you have the ability to automate stuff and you could probably eliminate, 50 to 75% of that cost altogether. So there's a lot going on there, multifaceted problems, and some of them are symptoms, but also I think multifaceted on the possible solutions.
Well, I think one problem with what you just said was some owners don't even have access to their own accounting books. And when they come to us, they're like, I can't ask my accountant, I can't give you access to my books for you to look to see if you can help me because I'm going to have to ask for access for my current accountant. I haven't logged into my books in years. And, one, always retain access to your own books. You can even
Yes.
download your accounting stuff onto your phone. So if you can run Facebook, you can check your books. And at
Yeah.
bare minimum, I think that business owners should be going in to just check to see if the bank recs are being done on a consistent basis. That's a real good glean into how the processes are going, how fast things are being turned around. What do you think about them apples?
I agree with you. I think any type of inspection process is good. This is why segregation of duties exists as an
Mhm.
internal control, managing and monitoring controls. This is what auditors in very large companies, this is what they assess when they come in as a part of the internal control environment. Business owners should not automatically assume they're exempted from setting out that extra level of protection for themselves. They should require there to be some type of accountability. And working, that's one of the things that we do for a lot of people is set up like an inspection process where quarterly we're just coming behind that person who's doing the routine accounting, and let's just make sure they're doing what they're supposed to. Is there anything that's out of whack? Is there anything
Mhm.
that's not getting done? Anything that's questionable? Things that we should be looking at is a secondary check. That extra level of assurance, I mean, that's peace of mind, right? That feels so good when it's like, check, like your car is operating appropriately. It's not going to blow up on the freeway, right? Same thing with the business. It's the exact same kind of process, right? Business is
Mhm.
going to keep going. I'm not going to wake up and be like, oh, great, I was just defrauded for, $100,000, right? That it won't happen if there is a level of accountability that's built in to the process.
Yes. And I think there also needs to be an emphasis for owners, and we're seeing this gap right here on where there is a total failure to apply strategic ROI mindset to expenses. There's this emphasis of, oh my gosh, we know that the economy is going to get soft, or at least that's the rumor, right? That's the rumor that we're going to hear. And so a lot of business owners are really focused on, how can I drive top line revenue? How can I cut expenses? But there's that third part that is about strategy of, yes, I don't want any unnecessary expenses. I want to make sure that I'm returning on investment on my expenses. So, a real life example of that is, if we have a business owner who is DIYing their finances because they don't want to invest the money into a accounting system, you're really cutting yourself off on the possibilities before you even get started because of that failure to understand the value and return on investment of some of those expenses that really need to be happening inside of the business.
Totally, right? I mean, we were having a conversation earlier. I mean, good people pay for themselves,
Yes.
or they are allowing you as a business owner to spend your time doing something else,
Mhm.
right? And there is an ROI on that somehow. But it is going through that process, like you said. I mean, we got to think about it. It's not blindly doing any of these things or putting them on autopilot, right?
Mhm.
So whether it's a person, it's a subscription, it's I mean, even personally, like things like Netflix and Hulu and all this other stuff, like we have to ask ourselves, like, are we using these things? What do we get in return for paying for them? Right. Some of these things, I mean, I was just had lunch with a banker. And one of the things we talked about was switching banks. It is usually a huge deterrent for people to change banks. Why? Because they get to go back and change all those ACH, the electronic auto debits, everything, money coming in, money going out. But isn't that a great exercise to go through? Where it's like, hey, wait a minute, I didn't know this was coming in or going out. Like, whoa, where did this
Mhm.
come from? And making a list of all of them so you can also keep track of like, hey, my insurance comes out on the 15th of every month. And then, oh, wait, I didn't see it this month. What's going on? Oh, our policy is about to be canceled. Like, oh, it prompts you. So I mean, I think there's like we got to do some of those things. Um, you know, force ourselves to kind of contemplate the ROI and push ourselves to kind of think in that way.
Yeah. And business expansions.
Yeah,
We've
yeah.
we've had clients before that are like, "Oh yeah, I'm going to greenlight this brand new, software." And you're like, "Great. What does it integrate with? What does it talk to? What problems do you solve?" And you're like, "I don't know. My staff just said that we needed it." And you're like, "Okay.
Yeah.
That's
Right. So again, but I think that's why the emphasis on planning, right? Again, it's more knee jerk than it is well thought out, orchestrated. Everything is, there's a high degree of leadership over any big initiative that's happening in a business, right?
yeah.
And I get it. They're short on resources in a lot of cases. And that's, one of the things I know that you and I spend a lot of time with clients on is like, how do we take things off their plate to keep them
Mhm.
focused on revenue generating activities, right? And how do we spend our time looking for optimizing activities, like whether it's optimizing tax savings, optimizing how we spend money, optimizing operations,
Mhm.
optimizing revenue, like pricing and strategy around like product diversification, service diversification, right? That type of stuff. Like it's knowing where you sort of function, but you kind of got to get stuff off your plate. Otherwise, there's that's hard to be great at everything. I mean, it just is.
Yeah, but finances throughout everything. If you don't have great accounting, you are up that specific creek without that specific paddle.
Yes, that is correct. Yes. So you can be lousy at a lot of things, but accounting cannot be one of them.
Yes. And, often with accounting, business owners go right to tax. They go right to tax liability because almost every owner that we have worked alongside of is like, I think I've paid too much in taxes. I really
Yeah.
have. And I know that we have to debunk the myth of the difference between tax prep and tax planning. And since you are a certified tax planner, can you give me the 10-cent tutorial through that? What's the difference between tax prep and tax planning?
Yeah. So tax preparation is literally the preparing of the return. So this is after year end passes, you take the numbers that come from the financial reports from the
Mhm,
books, and we're talking about business tax returns, right? And you put them in the return and you prepare the return based on those numbers, right?
mhm,
And there's, of course, I'm simplifying this a lot. There's a lot of different factors and a lot of knowledge you have to have as a tax preparer, not to diminish that at all. It is an important compliance aspect, but it is not doing any type of strategic thinking around are these numbers good or bad or could they be changed?
mhm,
Tax planning happens before preparation and before year end because it is our final opportunity as you near the end of the year to make decisions that would influence what is reported on the tax return, right? So it is changing the numbers that are going to go into the return that someone's going to prepare after year end. That is so powerful. If you can imagine being able to pull certain levers in the tax code to apply a deduction, maximize a refund, optimize a credit, all those different things, just by understanding A, what the opportunities are, and B, taking the appropriate action when it is necessary so that it impacts and drives your tax liability down. That is planning, and that is the power of planning. It is absolutely critical for anyone who owns a business to go through that process. Unfortunately, tax preparers don't necessarily think like tax planners. They
Mhm.
are really two different functions. And many times people think, oh, I have a CPA, they prepare my taxes, they're doing planning for me. That's wrong. That is not part of a preparation service. So this should be a prompt for many people to say, hey, wait a second. Am I going through the planning process? Am I doing that in the October, November, December timeframe? And if not, I need help with that. I need to influence my tax liability.
So, okay, give us an example of one of your favorite tax planning levers to pull, knowing that not every tax situation is the same. Not every business owner has the same goals. So, this isn't a one size fits all. And the tax plans that we've worked on together, they're all wildly different. But, what are one or two of your favorite tax tips or tax planning levers?
Okay, so I like anything that's free. First off, I guess that's just the accountant in me. So there's a couple things that are free under the tax code to take advantage of. One is the qualified business income deduction. If your business is eligible to receive it and you do it just right, you can get a free 20% deduction on your pass through income from your S Corp or your partnership. You just have to know how to optimize it. It's free. I mean, free 90 free. Who doesn't like
Yeah.
that? Right. I mean, like we all want it.
Oh, yes.
The other thing that I really like that is free is really this idea of utilizing your home for certain business events, whether it's strategic planning, customer um, outings, holiday appreciation. There's the endless, right? And that is like you have the ability as a business owner to use your home and deduct the fair market value of that usage. And as an individual taxpayer, you don't have to pick up that income. That's so powerful. I mean, so free is good. We like free. So, and it's already something you're already paying for. Your home, you're already paying for it. So why not? So I really like those two things. One thing that everybody should sort of know about planning is that it's not going to be like the silver bullet. You're going to be like, oh, I went zero taxes this year. It is a process by which you are sort of looking at the facts and circumstances and whittling away in different strategies. Um, any strategy where we're moving money from one pocket to another pocket, so you keep all of your money and you get a tax deduction, to me is another beautiful thing, right? So I'm not giving my money to anyone else, but I am receiving a tax benefit. And an example of this is like a 401k match, right? So
Mhm.
I own a business, I contribute to my 401k as an employee, my company matches it, gets a deduction for the 401k match, and I keep my own money. It goes into my tax deferred retirement account. Wow. I get a tax deduction, I keep my own money. So many times people are misled thinking that they have to spend all their money in order to get a tax deduction. And that's just not necessarily the case. So those are my favorite. Oh, one more. One more. Okay, I can't forget the power of this one. And that is under the Tax Cuts and Jobs Act, small businesses, so qualified small businesses, and there's a litmus test for that, of course, because the IRS can't make anything easy. And that is you have the ability to write off your inventory. So if you're a product-based business, like we had an online clothing retailer we did this for, I mean, we had a $600,000 deduction in 1 year. And it was no cash associated with that. That's going to be a huge deduction. That is a huge swing in the tax liability of what you're going to owe.
Yeah.
And of course, it's nuanced. There are other forms you have to fill out, like a 3115 for a change in accounting
Mhm.
method. There's stuff that has to be done, but why not explore something like that? You can only do that during planning. It's just at preparation time, it's too late.
Yeah. Okay, so for someone who doesn't, I don't do this day in, day out intense tax planning. As you're describing this to me, Susan, I'm like, okay, I've gone on vacations before where I've just like packed up my bags and like gone on vacation. Like we've had a good time, it's been okay. But it feels like when I plan the vacation, where I spend a lot of time researching the perfect place, researching everything, making sure the itineraries are just right because I'm a planner like that, we have such an amazing time. And like that's kind of how I'm looking at tax prep and tax planning. You can wing it and hope it's going to turn out right at tax prep, or you can spend a lot of time talking to the right people, getting your information, getting all your ducks in a row, prepaying for certain activities like you would for a vacation, prepaying yourself for retirement. Oh my gosh, yes.
Yeah, it's so true. Actually, I was just talking to a prospective client before lunch today, and he was really like, "Okay, I've already done this and I've already done that," and I'm like, "Whoa, whoa, 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 we gotta slow down." And the reason why is like you're going based on maybe some thoughts of what you think is the right thing to do,
Mhm.
but undoing or doing damage control on some things that were done improperly is actually way more difficult than doing it the first time. So
Mm,
it's sometimes, these business owners are in such a hurry to like get something done that they do it wrong because it's the urgency for them. They think, oh, I know what to do. And it's like sometimes we got to slow that process down to ask more questions, get real clear on goals, because the last thing we want to do is create a tax plan that's not aligned with where you're going financially.
yes.
What's important to you. I mean, a really good example about this is like depleting your taxable income, putting all your money into like, let's say a defined benefit plan. So you just suck away a ton of money, drive your taxable income all the way down. And then the next year you're like, I want to buy a new house. Okay, that's going to be a real problem because your mortgage lender is going to look at your tax return and say, you haven't made that much money.
Yeah.
How are you going to service this debt? Okay, those two things are out of alignment.
Mhm.
So it just does not happen in a vacuum. It is not just this year, this next year, the year after. We have to be looking further into the future when we do tax planning.
Oh, ab- absolutely. Now, going back to one of the things that you talked about earlier, which I'm pretty sure was a reference to the Augusta rule where you can use your home for certain business activities to achieve some form of tax benefit. But what about like me? I work out of my home. I live at the office is what I tell my husband. Like what what can I do here?
Yeah. So, there's the beautiful home office deduction when you work out of your home and you have a dedicated space. Again, this is sort of one of those things with the IRS where they don't make it easy, right? It's a litmus test for pretty much everything to see if you qualify and if you do. Most people, if they own a business, they're either self-employed or they have a business, even if they have an office, they still have a home office. They have the
Mhm.
ability in most cases to deduct the use of their home office. And so that is something like we've got a template that's out on our website you can download where you can do the calculation. I think there's a lot of misconceptions. People get real worried about like, am I going to sign up an audit red flag? Right? That's really kind of scary. But you know, following COVID, especially, I mean, almost everybody works from home. I mean,
Mhm.
there are some people who refuse to go back to an office. So I think times are definitely changing there, and I don't think there should be a lot of sensitivity around that. However, as with all things tax deduction related, it's a matter of contemporaneous documentation so that you can support the legitimacy of the deduction you are taking.
Mhm. Yes. Woo!
Yeah,
Absolutely.
that's a lot, Catherine.
That's a
Wow,
lot.
a lot to think about. I mean, I see why this gets to be an overwhelming thing for business owners. There's a lot of details. It's a lot to learn. It's a big learning curve.
Well, and there's also that tipping point as you grow in your career arc of where you hit that tipping point of going, oh, I just got hit with a massive tax bill. And usually it's like, well, that means I should have done planning the prior year. And you don't know it until you overpay. And that's insanely painful.
Yeah, yeah, especially when you're talking a marginal tax rate of 37%.
Ugh,
Yeah.
yeah,
So, yeah,
it's tough.
planning is the key. Yeah, and I mean, even if you have a small side hustle, there are still things you should and could be doing, and that's the stuff where you really have to be planning ahead. And the sooner you get started thinking about planning, the more you learn, the easier that process becomes as your business becomes more sophisticated. I mean, you really do accumulate a lot of knowledge in this area. Not to say you ever have to prepare the tax return yourself or do the planning on your own, because you probably don't want to. You want to leave that to an expert, but you become more of a participant in the process. And that makes it even more effective.
Mhm. Yes. Okay. So, question as the tax queen, when it comes to after you get your tax return prepared by your CPA or your enrolled agent or whoever's is doing your tax return for you, like what are the things that if you don't know tax about tax, what are you supposed to do? Like, what do you check?
Yeah, there's a lot of things to look at there. I think the first thing is to set a meeting, especially if you're not familiar with what you're about to sign, because you as a taxpayer are responsible. Sit down and with the preparer and have them kind of walk you through the basics. I'm not saying line by line, they have to explain in excruciating detail every line item, but hit the high points, right? So I would start with just the front page, right? And that would be, what's my top line revenue look like? Am I reporting on a cash basis, an accrual basis? Does that line up with what I know about my company, right?
Mhm.
Also, as you're sort of going down the specific expense categories that are on the front of the tax return, does that make sense with what you're seeing? Like if you've got a 401k plan or medical insurance premiums you're paying, do you see a number in employee benefit programs, right? So, or I know I bought equipment this year, but I don't see anything on the depreciation line, right? So you're trying to align with what you know happened in the business, the decisions you made, with what's reflected on that tax return. And that's sort of the lens to be looking through. So without getting like super into the weeds, one of the things that I would flip to almost immediately is a couple pages in is I would start looking at the balance sheet and I'd
Mhm.
pull up my books and I'd say, does that agree? Do the books from the balance sheet for my books actually agree to what's represented on my tax return? And if it doesn't, why not? What are those differences? And not like accusatory, like somebody messed up, but just like genuinely, like, what are these differences? What got adjusted? Did they pull the right books? Did something change? Did my people make a change before they prepared the return? Like, genuinely, what's causing that difference? And then the other thing that I spend some time looking at is that M1 section. A lot of people don't know what that is, but this is a reconciliation between taxable income, net income for the books, and taxable income for the tax return. So there's lots of differences between what would happen on a set of books versus what would happen on a tax return. So it's good to understand what those are. So, like, for example, I might keep my books on an accrual basis, but report my taxes on a cash basis. I'd have an accrual to cash conversion. Meals. Meals would be 100% deducted on my books, but in 2023, they're only going to show up as a 50% deduction. So that reconciliation item would show up there. Same for like officer life insurance. Um, just there's a litany of things. So I would spend some time in understanding that too. And then the last area I would go back and look at, especially if this is a pass-through entity, like a partnership or S corp, I'd look at the K1s and I'd see how income and expenses were allocated and what the categories of those incomes are, that income categories that I'm receiving. So is it ordinary income, capital gain income, interest income? What is it? And I would understand what those line items are. So that's what I would hit in terms of like reviewing for as a taxpayer.
And I love that advice of it's not accusatory, it's just understanding the differences. Like, just
Yeah.
educate me, walk me through it.
Yeah.
Yeah.
Right. And I mean, generally speaking, business owners, I mean, they're really smart and they really want to understand this stuff. Not that they want to be experts, but they want to be able to look at it and go, I know what that is. I may not know how to calculate it or anything, but I'm familiar enough to be like, that looks right or that looks wrong.
Hmm.
So they can, as a as the person who's about to sign that tax return, feel really comfortable knowing like somebody else is helping me understand how these different things are impacting me from a tax perspective. And they feel better about like, okay, I feel like this is right
Hmm.
versus I'm just blindly following somebody. You
No.
know,
Working with the right advisor who makes you feel confident in their work product. It aligns with what you feel is going on in the business. All really important things. And one one item I find fascinating is CPAs generally like to only play in their own sandbox. They generally do not like to branch out to bring in other advisors. And that's something that you've done a tremendous job of is bringing in other advisors. And you have a tool and it's called the ICO 25. What is that? What is this?
yeah. So Catherine, like this is the idea is that we need a team of people as business owners. Like there's no one person on this planet who has all of the expertise to really solve, to make sure that you are protected. But ICO stands for in case of emergency 25. It's the 25 people that you need in your life as a business owner. And sometimes there's duplicates or there's overlap or sometimes you don't need one of those people. But it is this idea that if there is something wrong that happens in the business, you know who to call. It's right there, front and center,
Mhm.
or it could be shared with your second in the business, your spouse, whoever, so that you don't have to go it alone. y- this is not a just because you're an entrepreneur and you're the visionary and the leader doesn't mean you're in it all by yourself. Your job is to put a team of people around you to lift you up, support you, encourage you, have that expertise when your knowledge is lacking, right? Guide and direct you to a more profitable and more safe and secure financial future. That's the goal.
Mhm. Yeah. There's no
Yeah.
skinny pill here, but it's inviting the right people into your business
Right.
ecosystem.
Yeah,
So,
and evaluating them, right? I mean, we see this all the time. Like, don't just leave that like, oh, it's my next door neighbor from 30 years ago. Like, you got to go back and check. You got to check up on people.
mhm,
And that's one of the roles that I really feel like that in a lot of cases you and I will really play is like they don't have to be the bad guy. I'll
mhm,
come in and I'll ask the questions, right? And so we can kind of take that tension away from like I'm not um client doesn't have to be, feel like it's adversarial in any way. I mean, not that we are either, but it's that they don't have to feel like they have to jeopardize the relationship. We're just
mhm.
going to come in and create some accountability.
Yeah, and wrangle all of those advisors into one room. So at one point, we can get everyone on the same strategy. The financial advisor is hearing exactly what the estate planning attorney is hearing, knows exactly what's going on for the business attorney, knows exactly what's going on for the CPA, and getting that all quarterbacked with the insurance brokers and maybe even one or two other people that are industry experts in that area. That's impactful, and that is something that is unique to solving problems, is almost bringing the think tank to business owners.
Couldn't agree more. I mean, it's a beautiful start for them, right? And that's something that we want to continue to help them to supplement. I think this is where they sort of go wrong. Business owners, a lot of times, I mean, they really are sort of in a bubble. I mean, and this is probably one of the chief complaints about. I mean, this is why organizations like Vistage exist, right? Because business owners feel it's so lonely at the top, right?
Mhm,
Um, but even in the smallest business, it really doesn't have to be that way. They still need this team around them to help guide and direct them.
mhm,
So they can have all of that and get away from being so reactive and start to position themselves to be more interested in the future, leverage the information they have and position themselves to be more forward thinking, more strategic thinking, right? So planning, we're creating predictability into the future, getting better at forecasting. It's like a muscle that has to be used, right? You gotta hone it a little bit
mhm,
before you gotta get good at it. Practice makes perfect, right? Same thing with working with this team to figure out what's my next move, what's my next big strategy, what do I need to change? How do I make those changes happen? What have other people done? What have you seen? What have you seen? And getting some buy-in and input, you know, so that you as a business owner don't feel like you're just trial by error. You're actually leveraging the depth of knowledge from a variety of experts who've worked with, cumulatively hundreds of thousands of businesses.
yeah, and simply, business successful business owners don't have the time to have all of those independent conversations and then have to say, "Well, wait, come on back. That's not exactly." Get everyone together,
Yeah.
get them all on the same page, and allow someone to wrangle them and to follow back up with, "This is the data we agreed upon. This is the metric and the result that I'm looking for. Are we hitting those key metrics? Are we on track? Are we off track?" And finding and being proactive. There's someone out there, Susan, who is listening to us that has the proverbial fire extinguisher in their hand. Like that is putting out fire after fire and getting slapped with tax bills and unexpected surprises.
Yeah.
And
Yeah.
that is all a symptom of a lack of planning, a lack of looking five
It
steps
is.
ahead. So,
And it's scary. It's scary. It does not feel good to be in that place, right? Nobody wants to be afraid of a deadline because you're going to get like the unknown tax number and do I have enough cash and have I made the right decisions? Like
mhm,
it's pretty frightening to be on the other side of that.
mhm,
So the good news is you're right with planning. and the appropriate systems, processes, and the right people to guide and direct you, it's 100% avoidable.
Yeah. Yeah. Now, don't get me wrong, you're still gonna have to have the fire extinguisher like in the office, but you're not carrying it around with you everywhere that you go. Like in business, something always happens.
Well, that's business. And so it's like that in accounting too. It's a series, everything is a series of problems,
Yeah.
right? So, but our goal is to prevent those as much as possible by leveraging technology and implementing controls and keeping an eye on things. And I mean, this is I mean, it seems sort of like 101, but it's a good reminder because I think we get so um interested in chasing obviously things that are just a lot more sexy than accounting and tax that we sort of neglect it. It gets backburnered a lot. We'll get to it. I'll get to it. I'll get to it. And it's just one of those things that when you don't, you end up with a really big fire. And what your hope is that the fire extinguisher is going to be enough. But what if it isn't? You know what I
Yeah.
mean? It can be really damaging. And that's not good.
No. And business owners, I have observed that they spend so much time and so much energy in their business that they forget sometimes that the business
Mhm.
is not your baby. Babies require you getting up at 3 a.m. to feed them, diaper them, take care of them. They can't even regulate their own temperatures. Like, if you are viewing and treating your business like a baby, that's bad news. Your business should be a world-class enterprise that is generating income and facilitating the life that you wish to live. And if your business is not serving you, there's a problem with that ICO 25 list we got to uncover for you.
Definitely. And, maybe a little bit of mindset too. You're going to surround yourself with a team that, maybe they're placating you and things like that, not challenge you, not forcing you to grow. Like, and maybe you're doing that to yourself too. So there's a little bit of mindset awareness training that sort of comes with piece of this too. Like, I think sometimes a business owner will just wake up and be like, oh my gosh, I can't live like this anymore.
Yeah.
So, yeah, somebody out there is probably, saying, "Oh my gosh, that's me. That's me. I need help." And so, the good news is there's hope,
Yeah.
because there's people like us that exist, and we want to transform your situation. We want to help business owners go from this state of undesire.
Yeah.
Like I don't like anything about this. I don't have enough cash. I'm paying too much in taxes. I feel like I'm up to my eyeballs in debt. Like everything is chaotic. It's
Mhm.
crazy. All the weight is on my shoulders. Like all
Mhm.
of that to a more desirable state that's aligned with where you want to go in the end. Like that's financial freedom, security, peace of mind, all of those things. It's attainable. Might take a little while to get there, but it's a process by which you have to go through, and planning and really getting a hold of your accounting and your taxes is a big part of that.
Well, and before we can even get in and help and support, we have to spend a lot of time up front getting to know the individuals that we choose to work with because we require much more than your average bear. We require to go through all the 7 different parts of the business. We want to look at your sales, your marketing, how work gets done in your office, what you're tracking, all of your data, where you want to be personally. We've spoke with a prospective client who's like, I want to leave nothing. Like I'm not one penny in my bank account. Like I am spending it all. And we worked with other people who have said generational wealth is the number one important thing to me. Those are 2 very different tactics. So we work a lot, and we spend a lot of time with owners up front talking about their long-term plans, their core values, how those core values show up in their business. And we've even found a disconnect between personal values and the values of the business. And you're just like, but you're the owner. How did Okay, all right.
Yeah.
Let's get that together.
Yeah. Yeah. I think it's moving so fast. They don't know how to stop it.
Yeah.
And sometimes we got to slow it down, and definitely going through our 6-step onboarding process, it helps a lot because they get homework and they've got to write these things down, they've got to think it through, they got to talk about it. I mean, like we want, it's like out with it. It's
Yeah.
like what I tell my teenagers, silence is more damaging than the discussion. You're
Ugh.
gonna have to talk about it. And once we get it out there, we can raise it as an issue, then we can fix it.
Yes.
So, I mean, maybe it's like a little bit of it's kind of like a accounting therapy. So, um,
Yes.
because we really do have to go through this process of identifying, like, sometimes the things that the owner thinks are a problem aren't really the biggest problems.
Hmm.
And so we got to ask a lot of questions to really uncover all of things, see what's really going on, and then we can truly advise. But
Yes.
it's really hard to do that unless we spend and invest a lot of time in really understanding everything they've got going on in the business.
Yes, absolutely. Well, Susan, thank you. This has been wonderful. So, with that, y'all, thank you for watching this week's episode of the Unboxed podcast. Please do the YouTubey things, like and subscribe to our channel. And of course, show your support by visiting unboxedadvisors.com, downloading our free resources, our deduction do's and don'ts, our home office download, and we even have an ebook, all oodles of things for you to check out, and our older podcast. You can hop in there and listen to our podcast. So that'll do it for us. Thank you so much for watching, and we will see you in the next episode. Bye, y'all.